Hello and welcome to my YouTube channel. I'm Safir Ahmed, a senior lecturer in accounting and finance at a UK university. I also work with ACCA as an early career investor. Today's video is about income tax computation, income tax calculation. If you're studying taxation unit, maybe as part of your ACCA F6 taxation, or if you are AAT level 4 personal tax student, or if you're studying taxation unit as part of your UK undergraduate accounting and finance degree, or if you want to learn the basics of income tax computation, that how to calculate income tax from a given situation. So I will give you a step-by-step approach today how to tackle a question from income tax computation. So the very first step in a given situation, you must have to identify what type of income it is. So there are three main types of incomes. We categorize our incomes into. So the first one is non-saving and saving and dividend. So these are the three different types of income. Now, if you look at in this question, employment income is considered as non-saving income because this is an income that people rely on, people spend on a monthly basis. Similarly, trading profit is considered as non-saving income as well. So it's a regular income. Now, non-saving income is also known as other income. So any income other than savings and dividend income is non-saving income, and it's also known as other income. So you can use both of these two words depending on what qualification you are studying. Interest received, of course, this is your savings income. And dividend is dividend. We always keep the dividend income separately. And the reason for that is there are different rates, tax rates for dividend income. So we must have to calculate tax on dividend income separately. Similarly, on saving income, the rates are same as non-saving income. However, there is something called personal saving allowance available in relation to the savings income, depending on a person's total taxable income, or in other words, taxable income. So we perform the first step, which is identify incomes into non-saving, saving, and dividend. The second step is produce taxable income pro forma, which I already done here, but you will be doing this as part of your second step. So once you've done that, then you need to record all of the incomes in the relevant column. So let's do that together. So employment income, first of all. And employment income is, remember, is non-saving income. So this 38,000 is will go under non-saving income. Now, please be mindful if they give you net income or gross income. Now, the gross income is before tax deduction. Sometimes they give you amounts like 38,000 and then they tell you PAYE, which is pay as you earn, tax deducted at source, maybe 10,000. So your net employment income is 28,000. So you need to remember one thing, always, you are writing the gross income as part of this pro forma of taxable income. Okay, so all of these income will go into your total columns because this will add up that this is the total income this person has. Okay, the second income here, which is, of course, trading income. So which is carrying out a trade. Now, trading income is also a non-saving income. So the trading income here is 10,000. That will also go into your total column. Then you have interest received or interest from bank. Now, remember, this is your savings income. So it will go under saving income column, which is 3,000. And of course, this will go into your total column as well. Then you have dividend. And of course, it will go under dividend column. So dividend is 2,000. And of course, this will go into your total column as well. So you have recorded all of the incomes in the relevant column. So that's your step 3 done. Step 4, you will sum up each of these columns. So for example, the total of the non-saving income is this much. Total of saving income is this much. Total of the dividend income is this much. And then total of the total column is this much, which is sum of all of these. There we go. So we have summed up all of these, each of these columns basically, and this is known as total income. Now, in some cases, they have used the word net income. So I'm writing here both and some of the qualifications. Now, after that, step 5, which is deduct personal allowance. So what we do here is less personal allowance. Now, the personal allowance amount is frozen at 12,570 for the tax year 22 finance 22 23 and 23 24. So this one we are talking about the 23 24, which is for AAT level 4. This is applicable if you are doing your exam after 29th of January 2024. Okay, so the personal allowance can be reduced if your total income, also known as adjusted net income, is greater than 100K, by the way. But in this case, you can see that it's way less than 100K. Therefore, full personal allowance will be available here. Now, one thing to notice here, you always deduct it from non-saving income, your personal allowance. And if you don't have sufficient non-saving income, then you go and adjust it against saving income and then dividend income. So depending on, for example, if a person does not have any non-saving income and saving income, they only have dividend income, then we don't have any choice other than allocating it against the dividend income. Also, one thing worth noticing here, the personal allowance cannot be carried forward each year. Every UK resident individual, they receive this personal allowance amount. So either they utilize it, use it, or lose it. So if they don't have any income, they're going to lose it. Simple as that. So this will go into your total column as well here. And this will give you the taxable income. So in order to calculate tax, we needed the income that on which we will base over tax. Okay, so the taxable non-saving income is this much. Saving income is, as usual, SAM. Dividend income is SAM. And total taxable income is this much. There we go. Now, income tax computation. So now we have the taxable income. So we're going to calculate over income tax. Now, first of all, you always start with the non-saving income. Okay. There is a threshold, remember, 37,700. So up to 37,700, we pay basic rate. So basic rate for non-saving and saving income is 20%. For dividend is, for this tax year, is 8.75%. Okay, so we start with the non-saving income first. So what I'm going to do is I'm just going to write the total amount first. So just as a reminder to myself that this is a total non-saving income on which this person will be paying tax. Now, the total non-saving income, and we know that the threshold of 37,700, so this 35,430 is less than that. So what's going to happen is that on the entire this amount, the tax percentage will be 20%, which is a basic rate. So 35,430, and the tax rate we already established that that's 20%. And then the tax on that will be income times by tax rate, which is 7086. So we have taxed the non-saving income. Now we're going to tax saving income. Now the savings income amount is 3,000. Now, one thing you need to understand about personal saving allowance. So I'm going to write here the word PSA. Now this is depending on your taxable income. So if the taxable income is less than 37,700, 1,000 personal saving allowance is available to the taxpayer. If this is between 37,701 up to 150,000, then 500 personal saving allowance is available. Now, what does that mean? On the first 500 of the saving income, there is no tax, so which is covered by personal saving allowance. Okay, so the personal saving allowance in this case, PSA, I can actually write it here, which will be 500. So on the savings income out of 3,500 will be tax-free. It will be zero rate, which means zero tax on that. Now, anything more than that, in this case, as you can see, which is 3,000 minus 500, so this will be taxed at the basic rate. We need to establish that first of all. So on a side, what you can do, you can say the taxed income, that what income we already taxed. So then it gives you the threshold and the rates and everything. So if you think about it, we already taxed 35430. And interesting enough, but this 500 is counted towards the threshold, by the way. That if the threshold has been utilized, although that we have not paid tax on that 500, so that 500, now if you think about it, it gives you this much, 35,930, and 3,000 minus 500, that's 2,500. If you add into that, we just want to establish the what rate you will be paying on. Now you can see that that's 38,430. Now we know that 37,000 up to 37,700, it is basic rate, and more than 37,700, it is higher rate, which is for the non-saving, and saving is 40%. Okay, so what will really help us to do here, I just wanted to show you that, but now I will show you that how much of the 2,500 will be taxed at 20%, and how much of it will be taxed at 40%. Now, how I can establish that? 37,700, remember, up to that amount minus what we already taxed so far. So 1,770 of the saving income should be taxed at 20%. So how I calculated it? Threshold 37,700 minus 35,430. But not 35,430, 35,930. And this is 20%, which is 1,770 times by 20%. Okay, now, so 1,770, now if you think about it, from the saving income, from 2,500, so apart from that 500, by the way, minus 1,770, we taxed at 20%. Remaining amount will be taxed at 40%. As you can see, this much, which is 730. So what you will write here is 2,500 minus 1,770, which has given you 730. So this will be taxed at 40%. Okay, so which is 730 times by 40%. Okay, now, so we tax the savings income as well. Now, dividend income. Now, dividend income, you need to remember that there is a dividend allowance as well. So for the tax year 23-24 is 1,000. So first 1,000 of the dividend income will be covered by dividend allowance. So I'm writing here DA. Now this is regardless of a person's taxable income or any other income. So this is available to everyone. Now just to give you a little bit background of this dividend income. It used to be 5 grand a few years back. So first 5,000 of dividend income was tax free. Then they reduced it to 2,000 for a few years, and now in the new tax year 23-24, they have made it as 1,000. So they're reducing it, and I'm anticipating that the government will get rid of this maybe in future. Okay, so the dividend allowance is 1,000, so no tax on that. And you can see the dividend income was 2,000. So anything remaining, which is 2,000 minus 1,000, this will be taxed at middle rate of dividend. So the middle rate of dividend is 33.75%. Okay, so that means that the £1,000 of dividend income will be taxed at 33.75%. So you have calculated that. Now, if you sum up all of this, so this is your final step here. So this will be known as income tax liability. So I can calculate it as sum of all of these. There we go, which is 8,069.5. Or if we round it up, it will be 8,070. Okay, hopefully that this was helpful. This is just the basic sort of calculation. Now, what I will really appreciate that if you can suggest me some topics, because its taxation unit is so wide. And if you can suggest me some topics so I can record more and more videos, I will be recording that on the basis of my understanding that what topics students find it a bit tricky, but I do need your suggestions in that. Thank you very much for listening. I will be back with other videos. Bye for now.